Hello, everyone. A very warm welcome to this awesome series. Correct? So, here we are with the banking system in India, banking and currency system. So, the topic for now is banking and the currency system. Correct? Uh, we have been doing various topics. You have been there associated with me, and it is an amazing journey which is going on. I hope you're seeing all my videos. I am bringing videos on various important topics. Till now, we were doing some most important topics in polity, and now we are doing important topics. I'm starting with economy, right? So, in Indian economy, we have banking and currency system. As to how the banking and the currency system works in India, correct? What is the structure? What is the framework? Regulatory architectures, correct? Digital horizon, everything we will have a look on, correct? How the currency system also works, correct? How the banking and currency system, both of them work. If you see the economy subject, this is one of the most important topic, banking and currency system. Although all the topics are interrelated, but this is one of the most important topic. Am I right? Correct? So we have to prepare it in that manner, correct? When we study about the banking system, uh, we have the Reserve Bank of India as a umbrella, correct? Godfather. RBI is like a boss, correct? RBI came from RBI Act 1934, correct? Reserve Bank of India. What is the purpose of RBI? So banking system overall supervisor is RBI, correct? Overall regulator is RBI. RBI also deals with monetary policy. So it has a monetary policy committee which steers the flow of repo and reverse repo rates. Basically, they have inflation targets. So who takes care of the inflation in India? It is the RBI. Who takes care of issuing of currency? RBI. Who regulates and supervises other banks? RBI. Who is the lender of last resort? RBI. Who is a banker to the government? RBI. So these are the functions of Reserve Bank of India. Okay. Reserve Bank of India consists of a governor and deputy governors. Correct. So I told you it deals with monetary policy and it maintain price stability, secure financial infrastructure and promote sustainable growth. Correct. Reserve Bank of India also deals with our foreign exchange reserves, correct, which is around 600 billion US dollars right now. Foreign exchange reserves is dealt with RBI. ठीक है? RBI will take care of foreign exchange reserves. I hope this much is good enough, correct? This much is good. Okay. Good morning, Manoj. A very good morning. Please let me know in case of any doubt. Okay. Let us go ahead. So, how does the banking system run in India? So we have savers, depositors. You can say depositors, correct? They deposit their money in financial institutions. They act as the intermediaries. So like banks, suppose banks, and banks take this money and they give it to borrowers. They lend it in terms of loans, access capital via loans for industrialization and job creation. Am I right? So this is the deposit interest rate, maybe around suppose 3%, and lending rate, loan 10%. So this difference of 7% is called credit creation. here is where the credit is created. Credit is created. Credit creation happens by the banking system. Okay, we had nationalization of banks, which happened earlier, correct? So we have this Reserve Bank of India. I told you, Reserve Bank of India as a supervisor, regulator to other banks, lender of last resort, banker to government, supervisor to other banks. It takes care of foreign exchange reserves also. Okay, simple. I told you about credit creation by transferring money to in form of loans. So new digital infrastructure unified lending interface has come, enabling seamless and consent-based data sharing. Okay, now come let's dive a bit deeper into banking system. Okay, as to what type of banks we have in India. Okay, so we have scheduled banks and non-scheduled banks. Okay, so when we talk about scheduled banks, what do I mean by that? These are the banks which are listed in the second schedule of RBI Act 1934. These banks are listed in the second schedule of the RBI Act 1934. Second schedule. Non-scheduled banks are not listed. They are just there. They are not listed in the second schedule. Okay. So let us first talk about scheduled banks. The paid up capital and reserves should be more than at least 5 lakhs. At least 5 lakhs. Okay. But there is no such requirement in non-scheduled banks. Okay. Whatever affairs are conducted in scheduled banks, they are in a manner not detrimental to depositors. They are in a manner not detrimental to depositors. Okay. A scheduled bank has to keep a cash reserve ratio deposits directly with the RBI. This is important. The CRR here is kept with RBI and they have to maintain SLR also. Now, what is SLR? Statutory liquidity ratio. This is kept with the bank itself. So, if I am a bank, I'll keep SLR requirements with me only. They are in the form of bonds, gold, etc. Okay. So, scheduled banks will have paid up capital more than 5 lakhs. They will not be detrimental to depositors. CRR has to be maintained with RBI. SLR has to be maintained with the bank. And they are required to file periodic returns. Okay. They have to file periodic returns. Okay. What is a privilege being a scheduled bank? They get bank rate loans from RBI. They get automatic clearinghouse memberships and rediscounting of first class exchange bills. These are some of the privileges being a what? Being a scheduled bank. Okay. Now, what are the examples inside scheduled banks? We have commercial banks, private banks, public sector banks. Correct? This is in scheduled banks. So this was we studied about scheduled banks. Now coming to non-scheduled banks, I told you they are not listed in any second schedule of the RBI. They don't have a fixed capitalization criteria. They maintain CR deposits, but with themselves, not RBI. They will maintain cash reserve ratio like the scheduled banks, but scheduled banks will keep it with RBI. Here, they maintain it with themselves. No strict periodic return filing requirements. So SLR, CLR, whatever they are keeping, SLR, so they don't need to maintain. CRR, they will maintain with themselves. Cash reserve ratio and no requirement for filing returns. Limitation, it is a higher risk profile, correct? They cannot borrow from RBI. This is a very important point. Except emergencies, they cannot borrow. No clearinghouse access, no bill rediscounting. These are some of the limitations of being a non-scheduled bank. Okay, I hope we are clear, we are going good. Okay, shall we go ahead? Okay, sure. Let us go ahead then. Going further into the uh, process of understanding this, I told you we have Reserve Bank of India as apex regulator owned by Union Ministry of Finance, Government of India. Correct? Now, banking structure has these many types of banks. First, we have commercial banks. Okay, we'll see commercial banks. They are mainly driven by profit. Okay, commercial banks are mainly, we'll see them. We'll see it in a while. So, first is commercial banks, then we have cooperative banks. Okay, commercial banks are driven by profit and they are regulated under Banking Regulation Act 1949. Okay, to regulate and give a structure to banking system, they have brought a Banking Regulation Act in 1949. This governs the commercial banks. Okay, then there are cooperative banks. They are driven by mutual benefit, unlike commercial banks. Customers are the owners, most important, and cooperation of stakeholders is the motive. The idea is to get mutual benefit. Me and you and some five of us, we six of us can make a cooperative bank. Okay. Then comes third, development banks. They have high risk and long term banks. Correct? Also known as term lending institutions, DFIs for specialized sector growth, dedicated financial institutions for specialized sector growth, for development of, suppose agriculture is there. So for agriculture, they will have a separate bank. So they are more focus oriented. They are development banks. And then comes the last one, differentiated banks. They are niche segment focus. They will not have money of everything, anyone, and from anywhere. No, they have focus. They are focused. Niche word itself suggests that they have definite focus. So MSME, for MSME there will be one, correct? Or maybe for agriculture, education, whatever it is. It was introduced by Nachiket More Committee 2013 for specialized products. Important. N se niche, N se Nachiket More. You remember like that. Okay. Niche banks, Nachiket More Committee. I hope this much is clear. So we have four types of banks: commercial banks, cooperative banks, development banks, and differentiated banks. C, C, D, D. These are the four types of banks. C, C, D, D. Correct? Like that, can you remember? C, C, D, D. And four types of banks. Okay, let us go ahead. So we have first commercial banks. Correct? Commercial banks, profit generation and sharehold value. Shareholders' value is the primary motive. Profit generation is the primary motive. Correct? They are owned by private shareholders or the government. Customers are just clients. They are just clients. They don't have any say in shareholding. Owner shareholding is done by private owners, separate people. Correct? Me and you are just customers. Correct? So, example of commercial bank, simple HDFC, Axis. Do I or do you have a share of, we are holders of HDFC? No. Correct? If I keep my money in Axis, I'm not its shareholder. I'm just a client or a customer to them. Okay? Broad-based financial services, and they service along all sectors of economy, across all economic sectors. There is no limitation. Okay? Target operations across all sectors. Ownership structure, I told you they're owned by private individuals or government. Okay, these are commercial banks. Okay, let us go ahead. Any issues, any doubts? Okay, good, very good, Manoj. That's good. Okay, next we have cooperative banks. Cooperative banks' primary motive is cooperation and mutual benefit of members. So if 100 of people of us we have money like 100, so 10,000 rupees money collected, will form a cooperative bank. I'm just giving an example. Now that bank will be the who will be the first priority person to give loan? Us only. We people only will be the first priority. The money will rotate among us only. So mutual benefit, or sometimes outsiders also when needed, mutual benefit will be the priority, not profit generation or commercial purpose. Okay. Ownership structure, they are owned by the members themselves. The customers are the owners. Okay. So me and you, if we open a cooperative bank, me and you will be the owner. Correct? 50%, 50% like that. Target operations. So they target localized, community focused financial empowerment, agriculture, rural credit, and small businesses. Okay. This is their functional area, target operation. Just a moment. Okay. Done. Then let us go ahead. So we have seen commercial banks. We saw cooperative banks. Let us go ahead. Now we have something called NBFCs. Okay, I'll come to it in a while. Just give me a huh. Okay. So we saw about commercial banks, cooperative banks. Now there is something called NBFC, non-banking financial companies. Our banking system, although they are non-banking in nature, but they are doing a lot of banking stuff. Correct? We'll see. NBFCs don't operate under Banking Regulation Act. No, because they are not banks exactly. They work under Companies Act 1956, NBFCs, and they require more than 50% as of income from financial assets. This is the requirement for an NBFC, correct? So what is an NBFC? Like Bajaj Finance, Muthoot Finance. These are NBFCs. They are allowed only to lend. Lending is only allowed. Correct? Let us have a look. Let us see what is the difference between a bank and an NBFC. Correct? Banks can accept demand deposits. So I have a current account or a saving account in my bank. I can go anytime. I can put a card, ATM card, and pull out my money. My money is there in the bank. I go, I put the card, I take out, I put the pin and take out my money. That is called demand deposit. The deposit is available on my demand. Is it allowed in NBFC? No. Correct? It is not allowed in NBFC. They cannot accept demand deposit. Then next, payment and settlement system. So all the banks are part of payment and settle system. They can issue checks. I can do UPI transaction from my account. Correct? Via the bank. Can it be done through NBFCs? No, not in payment and settlement system. They cannot issue any check. Okay. This is the difference between banking and non-banking finance companies. Since we are studying about banking and currency system, we should be aware of this institution also. Deposit insurance credit guarantee is there in banks, but it is not there in NBFC. So deposit insurance credit guarantee is there in of 5 lakh. Correct. Next, reserve ratio like CRR, SLR, it is mandatory to be kept by banks, but it is not the same for NBFCs. They are not required to maintain any CRR or SLR. Okay. Governing legislation, Banking Regulation Act 1949 for all the banks, since banking is there, so all the banks. And for NBFC, we saw already it is Companies Act 1956. It is not Banking Regulation Act because they are non-banking financial companies. Correct? Name itself says not a bank. What is the FDI limit? 74% for private sector is allowed, and in NBFC, 100% is allowed. You should know about this difference. The question might come conceptual on this difference also. Correct? I hope you're getting my point. Okay, I hope this much is clear. All going good? Are we going good? Yes, LIC, yes. Manoj, correct. Okay, let us go ahead then. Chalo. Let us see more types. Now, to keep a uniformity across nations, there was a Basel Committee on Banking Supervision under the Bank for International Settlements Switzerland. They sat with a committee called Basel Committee. Okay, their aim at absorbing shocks and strengthening global risk management. The aim was to how to restructure banks, how to keep some requirements, reserves, so that if there is any risk of management globally, that can be tackled. So Basel I committee sat in 1988. Focus was credit risk. It defined capital structure and set the minimum capital requirement at 8% of risk to ratios assets. Okay. Then came Basel II in 2004. It redefined risk taxonomy. It expanded to cover three distinct risks: operational, capital, and market risk. Okay. So it was more concentrating on risk taxonomy. Then came Basel III, 2010, systematic resilience post 2008 financial crisis. It focused on four vital parameters: capital, leverage, funding, and liquidity to prevent simultaneous sector failures. So it will help banks to maintain some amount of capital as reserves that cannot be touched. That is why Basel III norms are followed now. Now they are followed. Basel III norms. Okay. So Basel committee is related to banking regulation from BIS, Bureau of International Settlements, Bank for International Settlement, BIS, from Switzerland. You have to keep this in mind. Basel committee will come in exam and they will ask that Basel committee is related to which sector. then don't go and put tourism sector. Correct? It is banking sector. Okay, let us go ahead. So we have few more terms related to banking system. One is capital adequacy ratio or capital risk weighted asset ratio. How much of total capital you have, total capital divided by total risk to weighted assets into 100. This is the ratio. Okay. Capital risk to weighted assets to capital is the capital adequacy ratio. How much of capital do I have as a reserve requirement? As a ratio to bad loans. Correct? It ensures bank hold adequate own capital to cover presumed risk percentage of loan across sectors. Correct? Some part of the asset capital which bank is having, they have to keep with them as CRAR so that in terms of emergency, that can be availed. Capital adequacy ratio. Okay. Then there is something called neo banks. I'll come to DSIB. Neo banks are those which are 100% digital fintech. They are 100% physical. There is nothing paper, no paper job, no paperwork. Correct? Zero physical branches, lowers operating cost for cheaper personalized service. This is important. Okay. Idea is they should be 100% digital, zero physical branches, and low operating cost. These are advantages. Correct. Partner with traditional banks, obtain own banking license. This is the way of operation. Example Razorpay, Jupiter, Open. Correct. Neo banks are 100% digital. Now comes DSIB, domestic systematically important banks. Domestic systematically important banks. Now, what are these banks? We say them TBTF, too big to fail. What do I mean by that? They are so huge in their size and capital that if they fail, India ka 1 to 2% GDP might get here and there. This much big they are. Which banks come under this? SBI, ICICI, HDFC. These banks are, they cannot fail. If they fail, then to gone only. 2 to 3% GDP ka gone. Okay. So domestic, they have 2% of India's GDP. Asset enjoying funding market advantages due to perceived state backing. Okay. So please remember this. These are another three types of financial institutions in our banking. Okay. So we have this horizon stringent regulation and resilience, correct transparent resolution of stressed assets on a timely basis, continuous human resource training and rigorous data protection protocols. Fintech symbiosis, it deepens collaboration between traditional banks and fintech. And finally, we have inclusive economic engine, driving nationwide financial education, maintaining stable liquidity. This is a very important thing which RBI needs to do. Okay, this is just for you to understand. Now let us come and see the currency system of India. Who is responsible for designing and issuance of currency? What do you think? Just a moment. Notes and coins. Who will do that? Reserve Bank of India. And the central government jointly determine changes relating to the design and form of Indian bank notes and coins. So it is not just RBI that it can anytime decide and change currency or change a note. No. Central government also has to do the same. It will be done by both. Okay, are we going good? Liquidity means, Manoj, liquidity means how easily can I convert something into money form? For example, I have I have a check. I go in bank, I deposit the check, I get money. Correct? Simple. Check. Now I have a piece of land. It is my asset. I want to get some cash. So I thought of selling it. But can it be sold easily? Just like that? Not possible. It will take time for it to sell. Correct? So check is more liquid, land is less liquid. Anything which is very close to getting cash, if easily it can get into cash form. Correct? So UPI payment, same thing. ATM debit card, it is more liquid than check. Correct? So it is RBI and central government. Any modification in design of currency notes require approval from both RBI central board and central government. Okay, for the currency system. In case of coins, the authority to alter their design rests exclusively with central government. This is an important point. In case of coins, the authority is with central government. Now, what is the role of issuing RBI in issuing banknotes? Under Section 22 of the Reserve Bank of India Act, RBI enjoys the exclusive authority to issue banknotes in India. Correct? RBI prepares the proposed design internally and place it before the central board. Okay. According to Section 525 of the Act, the design, form, and material of banknotes are approved by the central government after considering the recommendations of RBI Central Board. So, RBI Central Board will give some suggestions. Central government is free to take all of them or take none of them and give a picture of the currency. Okay. The responsibility for managing currency relations related functions lies Department of Currency Management of the RBI is headed by a deputy governor. Whenever a new design is proposed, development department develops the design and submits it to the RBI, which will give it to the central government. So please remember, issuing of banknotes is done by RBI. Okay. Next, we have role of central government. So Coinage Act, we have the Coinage Act 2011, which empowers central government to design and mint coins of different denominations. 5 rupees, 10 rupees, 2 rupees. RBI's role is restricted in distributing coins supplied by the government. Only you bring us, we will distribute. That's it, is our job. The other job is Coinage Act. Okay. Every year, government determines the number of coins to be produced based on requisitions. Correct? So coins are manufactured in 4 government-owned military this thing mints: Hyderabad, Mumbai, Kolkata, Noida. These four are this thing coin mints. These four are coin mints. So coins are made in Mumbai, Hyderabad, Kolkata, or Noida. RBI's currency management system is there. It manages the central government and all other stakeholders. RBI estimates the denomination-wise requirement, how much of notes of how much value are required for a particular year. Based on these estimates, the RBI places order with currency printing press. Okay. Currency, now government-owned presses are there, Nashik, Devas, correct? RBI owned presses, though its wholly owned subsidiary, Bharatiya Reserve Bank Note Mudra, the RBI owns. Okay, BRB and NML, Mysore. Recycling and disposable of notes. So, currency notes returned from circulation are carefully examined. Note that remaining suitable for use are reissued into circulation. Notes come back, they see how much it is worthy, and they can go back to the economy, can be sent back. Soiled, damaged, and multi-lated notes are drawn and destroyed. They are just drawn out and destroyed. No more untidiness is required. Okay, so I hope we are going good. Any doubts? Four have their own stamp. Yes, unique serial number is also there on notes, Manoj. There are unique serial numbers also. Okay. Now types of currency. So we have Ashok Pillar series. So the first banknote issued in independent India was the rupee 1 note in 1949. Okay. Portrait of King George was replaced with Lion Capital of Ashok Pillar at Sarnath. This series came to be known as Ashok Pillar banknote series. Okay. Then we have Mahatma Gandhi series. We all know that. 1996 it was introduced. It carried portrait of Mahatma Gandhi on the observance side. The lion capital of Ashok Pillar was shifted to the left side, correct? And they feature both Mahatma Gandhi watermark and his portrait, both. Okay, so Mahatma Gandhi series started from 1996. So we have 10, 20, 50, 100, 500. 1000 is there? No, now not there. Compared to 1996 series, these notes incorporated several additional security features. 500,000 notes of this series ceased to be legal tender. So I told you, following demonetization announced in midnight of 8 November. Okay, Mahatma Gandhi new series is there, which was introduced in 2016. So it showcases India's cultural heritage, scientific accomplishments, correct? Like we have stone chariot. We have stone chariot on 50 rupees note that is taken from Hampi, correct? So these are the things. This series is distinguished by its vibrant and distinctive color theme. RBI has given exclusive right to issue banking notes under RBI Act 1934. Central government, they have the authority to design and mint coins under the Coinage Act. Note RBI coins government. Changes in banknote design require the approval of both RBI and government. But modification of coin design are solely the price at the this thing prerogative of the government. Okay, I hope we are clear till here. When it is issued, what is issued, correct? So let us try some questions on these banking system and currency system of India. I hope you enjoyed the session. So let us have some quick questions. Which among the following is called the banker's bank? Obviously, RBI, correct? It is known as banker to all commercial banks, right? Which committee recommended the introduction of regional rural banks? This is important. There are regional rural banks also. So that is M. Narsimham Committee on the recommendations of Narsimham Working Group. Okay. Which institution issues 1 rupee currency note in India? Very important. Just now we saw. So it is Ministry of Finance. 1 rupee note is always issued by Ministry of Finance, not RBI. The signature on 1 rupee note is of signature of 1 rupee note is Finance Secretary, not RBI Governor on 1 rupee note. Who among the following is not a scheduled bank? Commercial, local area, payment, or cooperative? So it is payment banks. Okay. Not all payment banks are scheduled banks. Please keep in mind. Next, we have MICR stands for MICR stands for Magnetic Ink Character Recognition. Okay, it is used for check processing. So, statement problem. RBI has the sole right to issue currency notes in India. 1 rupee note is issued by RBI. Question: coins are issued by the government of India. Which of the following statements are correct? So, 1 and 3 are correct. Rupee 1 note is not issued by RBI. It is issued by Finance Secretary. Which bank is known as the apex institution for agricultural finance? So it is NABARD. Okay. National Bank for Agriculture Research Development was established in 1982 for agriculture and rural development. Okay. Next we have, what is legal tender? A currency which can be adopted by law for settlement of debts. NEFT settle transactions individually. RTGS is used for high value transactions. UPI transactions are real time. Which of the following is are correct? So NEFT settles transactions individually. It works in batches. So every like 30 minutes, one batch will go, something like that. They will club and then they will do all the transactions in one shot. Okay. Next. Which type of bank account generally provides the highest liquidity? So it is current account. I told now I just go put my card and take money out and come. Okay. Again, statement problem. Cooperative banks are regulated by RBI. Scheduled banks are listed in second schedule. SBI was not nationalized in 1955. Which one is correct? So here all three are correct. Cooperative banks are regulated by RBI only. Scheduled banks are listed in second schedule of RBI Act. We discussed about it. And SBI was nationalized in 1955. Correct? Then we have, which of the following is an example of development bank? Development bank. So that is SIDBI, Small Industries Development Bank of India. Correct? Name itself suggests development bank. Debit cards withdraw money from customers' account. Credit card provides short-term credit. RuPay card is an indigenous card payment network. So all the statements are correct. Okay. CRR is maintained with RBI. SLR is maintained with banks themselves. Both CRR and SLR are monetary policy tools. What do you think? CRR is maintained by RBI. Yes. SLR, bank themselves. CR and SLR are just policy tools. Which organization manages UPI in India? Important. Who manages? It is NPCI, National Payment Corporation of India. Okay. Chalo. So this was it for today. I hope you enjoyed the session. Correct? We will keep coming in further sessions. Please make sure you are practicing these questions, you are practicing the topics. I'll keep coming with other economic topics. This was it for today. Please keep practicing. Please keep doing the questions. They are very, very important. We'll meet very soon with another topic. Thank you, everyone, and have